All right, it's Friday, March 22nd. This is an end of the week SPY recap. And for this week, price moved higher essentially. We'll look at the 5 days of the week, Monday, Tuesday, Wednesday, Thursday, and Friday, and kind of discuss how it unfolded, what some of the opportunities were, where things might be looking to go next. But on the weekly chart here, after kind of almost 2.5 weeks of consolidation, we seem to have broken out to the upside with another green bar here, continuing this big long-term trend we're talking about that really hasn't, other than this one red bar, had any kind of a new lower low. So that could be coming at any time. After the inside bar last week, we were certainly expecting, or not expecting, but looking for the possibility that price could immediately start lower, take out this inside bar, reach this target. Then we were going to see whether or not that continued strong with a red bar for the week, or maybe inside bar failure where it comes down and reaches the target and then comes back up to the midpoint. But instead, if you look at it, it was just a 2-up week. Price never made it down there, and eventually by midweek here, or really toward midweek, we kind of took out the high of that inside bar, which projected up here, and now we closed green for the week. And so let's go over it day by day. What this means, by the way, is just on the monthly chart, we're still, above the open, green for the month. So the continuity is to the upside. And the more we were talking about how we couldn't get any kind of a failure, a move down, that failure would just make it more likely to continue the uptrend. So that really developed on Tuesday here when we had an opportunity, which I'll go over Monday in a second, where we kind of gapped up a little bit, closed red. This was the day where we really could have continued lower, taken out the weekly low, taken out that green bar, low of the month and everything else. And instead, price decided to move up. And from that point on, we've moved up, gapped up a little bit yesterday. We've had a little bit of a pause in here, after a pretty big move. So we'll see what that means going into next week. But in terms of, like I said, coming into the week, we had the inside weekly bar and we didn't know what was going to happen. I would say we were biased to the downside looking at the way that bar closed. But what happened? Price immediately gaps up on Monday, right out of the gates. And if you look at it, what it was it paused for a few bars and then started higher. So you could have bought that there and seen what happens. And essentially that turned into maybe kind of a small losing trade once it kind of came down to the midway point of that first bar in this area. Once I saw this red bar form, I remember on Monday, I was thinking the low of the day should be taken out at a minimum. And that's kind of what happened here for the rest of the day. So, it was a tricky day of trading because, you're expecting lower, price gaps up, pauses, starts up a little bit, but then doesn't follow through. So then you go, okay, we're now red on Monday. We should this could be a good day to maybe start the downtrend. We're kind of essentially below the halfway point of the prior week, and we could be going, we should take out the low of this bar and maybe move lower and trigger a 2-down week. But what happens is price gaps down here. As expected, we take out the low of the previous day, but it never follows through. It goes inside, 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 and then it breaks to the upside. So I discussed how, that was an intraday buy signal below the midpoint of the prior day, so you don't necessarily have to take it. But once it got to the midpoint of that day on this move, you were anticipating an outside day to the upside, and that's exactly what developed. So it's kind of a big green reversal day, outside day. Again, not necessarily simple to trade, but you shouldn't have got hurt. There was no reason to be going short here at the open, given that we couldn't take out the first bar low. And if anything, if you wanted to just give a shot to the buy side here, you could have done it. And once it hit the midpoint, or if not, you did nothing. And if you hit the midpoint of that bar, that was a signal you were probably heading up here. So that was the only way to consider this in terms of intraday price structure relative to the previous day. Then you have a big green bar from, on Tuesday, and you're expecting higher onto Wednesday. That was Federal Reserve Day, so you don't know what's going to happen until the Fed really announces things. But if nothing else, you did have kind of a red to green opening here that just made a quick move up to take out the first bar high, and then we paused almost all morning long. So it just wasn't what I was, the way I would look at it is you try that buy here very early and wanted to see maybe you get a directional move up in the morning before the Fed announcement. But once things paused around, you kind of knew the market was waiting for the announcement. And I shot a video how after it moved up here on this big green bar, after the announcement. Then this inside bar, you could have bought that here for expectation to move higher on the day. So I made a video on this day that if you didn't do anything because of the Federal Reserve, there was a unique opportunity on Fed Day to kind of buy, given this structure and the expectation to move higher, especially towards the once you had the inside day breaking to the inside week breaking to the upside, you expected that high to be tested, which it did. Anyway, so then you get the big green bar on Fed Day, and then you gap up the next day. And this was a tricky day in terms of your little exhaustion risk. I think you sat there, and I remember calling this kind of inside price action. I was biased to the upside, but I was hoping for more of a red to green move to even try. But instead, price just kind of paused in here. And then I remember saying, okay, after this big inside pause, I'll buy this green bar and we should take out the high and then see what happens. It came out, took out that high. Once it failed, I immediately broke even. I took a very small gain. I remember saying that. And then for the rest of the day, price moves lower. So you have a little bit of a reversal bar here. But now the key here is that you're at the end of the week, meaning that, even on a 2-down day, this weekly bar is likely to still close green if you don't get a big drop. So you're kind of in conflict in the sense that when things happen matter, this daily bar on Friday wasn't going to change the weekly bar too much. So that's why it was a little tricky in terms of, are you going to get and there's this gap in here between the high of this bar and low of this bar for support. So anyway, I shot a video how I actually bought some puts here just to see what would happen on the downside, took out that low, and once I saw that fail, I immediately exited the trade. I discussed how you can scale out here, set up a no-risk trade, and once it came up and try to go down again, couldn't do it. All in here, you saw that you weren't getting the follow-through. This was an inflection point that I talked about. Once it made that first green bar, you could have exited if you didn't scale out. Whatever it was. And then all price decided to do for the rest of the day, you're still below the midpoint of the prior day. It came up, it took out the highs of the day, that's liquidity, and then it immediately falls towards the end of the day. So this all in here is just typical algorithmic price action. There was no real directional move to the upside because you're below the midpoint of the prior day. And on the downside, after this move failed, it was hard to do anything. And, once it took out the high and you saw the red bar with a few hours, an hour to go, do you really want to get short? No. So there was just nothing to do in here the way I see it. And we end up, you're kind of expecting this week to close green with a little bit of pausing action in here. So finally, going into next week, what do we see? We have a gap. This is nice because, you have this little red bar here. So you can see probably maybe wanting to test lower, but there's a nice gap of support in here. And that's the midpoint of that first bar. So everything's going to be dependent next week on if we move lower here, do we hold in this gap? And then it would be great is either on Monday, we get a down and then we come up through the midpoint of that bar. That's a good buy. Or we maybe get a little bit of down action that holds in here, then starts up. That's going to be a good buy. And, the only failure is going to happen is if we really gap down big below the midpoint of that, start lower and get a 2-down week. We haven't had that in a long time. Or you can get kind of an up move. We always talk about this, that event, maybe right out of the gates, we go up and we take out that high, the weekly high, and then we somehow reverse and go through the midpoint, of this week to the downside. That might be the beginning of a red outside bar to the downside. So we'll look for that. But, you're kind of expecting maybe that this is just 3 weeks of pausing in here and we're starting a whole new leg to the uptrend. And this is kind of an actionable signal to the upside if we start above the midpoint of that bar and start higher on Monday. But, you're expecting a little lower. But again, keep in mind, this little area here is key support. If you go to the 15-minute chart and zoom it out, this is kind of the inefficient pricing in here that could be rebalanced before heading higher. And it would actually be great to come down there, not follow through too much, and then get an eventual, daily chart back to the upside. So we'll see what happens with this uptrend. It's very strong. This was consolidation for a while, maybe enough energy to really start a whole nother leg up at all-time highs. So that's a recap for the week, and we will see how things open on Monday.